And my real worry now is that the bank might tend to just follow the US Fed and lift interest rates quite drastically, thereby pushing us into the potential for a worse downturn than we already face.
Plenty for the Treasury to be chewing over the next couple of weeks, and a big job ahead in the weeks and months for the next chair of the Treasury Select Committee. Mel Stride, who had been doing it for some time, is now obviously in government. The race is on to replace him. One of the people hoping to replace Mel Stride is the former Cabinet Minister and Conservative MP, Andrea Leadsom, who joins me now. Morning, Andrea.
Hi, Matt.
But let's start with interest rates. Interest rates expected to go up pretty sharply at midday today. Is that the right move by the Bank of England? And I wonder whether you think, as some of your colleagues that I know we spoke to before, thinks that actually the Bank of England's been a bit slow and we should have possibly got here earlier in the attempt to try and get a grip on inflation.
Yeah, I mean, I am of that view that actually the bank has been too slow in raising interest rates. Actually, we have a whole generation of younger people who've grown up thinking interest rates at 2% is the norm, and they've taken decisions based on that. Whereas actually what we know is that the historical trend rate is much closer to 6 or 7%. So now it is a huge shock to people, particularly with asset prices where they are. And what that means is people, whether they're renting or whether they're trying to get onto the housing ladder, it is going to be so much more difficult for them. So yes, I think the bank was slow in raising interest rates at a time when the economy was quite flush, but inflation was heading down the track quite obviously. And my real worry now is that the bank might tend to just follow the US Fed and lift interest rates quite drastically, thereby pushing us into the potential for a worse downturn than we already face.
And this is because the Fed in the United States put up interest rates yesterday. I mean, one of the impact on that is, you talk about there's a whole generation of people who've bought houses and done their affordability on the basis of low interest rates. There's a story in the Times today: house prices might fall by up to 30%. A leading mortgage lender has warned as high interest rates and strict financial stress tests squeeze the market. That's just over the next year. Do you think house prices are too high? Would it actually be a good thing if house prices fell?
Well, actually, that up to 30% was a kind of bit of a disaster scenario outlier prediction. And I think even
the central one is sort of 8 to 10%.
Exactly.
Yeah.
8 to 10%. And so, if you're asking me if an 8 to 10% drop in house prices is likely and if it would be helpful, I mean, obviously, if you've just bought a house and it takes you into negative equity, that is not helpful. But as an overall rule, house prices, asset prices generally, have gone up far, far too far and too fast, shutting out people who are trying to get onto the housing ladder. So a small decline in house prices, I think, would help so many people who've been saving and just seeing the house price moves escaping away from them. I mean, it's difficult because there's always winners and losers. And that's why, if I'm successful becoming Treasury Select Committee chair, a key focus for the investigation we'll be doing into the autumn statement will be looking at winners and losers, the right balance of fairness between the generations, between renters and homeowners, and so on. All of these things are absolutely critical because as you face a downturn, it's vital that we protect those who are most in need, but at the same time that we're promoting, encouraging the wealth generators, the people who are making the jobs and paying the taxes that helps us to pay for good, strong public sector services.
You mentioned the fairness between generations, because there is a big tension here, isn't there? Whether it's high house prices, high interest rates, that tends to be quite popular with older, dare I say it, more conservative leaning voters. That if you own your own home and you've got some savings, you want higher interest rates and you want house prices to go up. But there's a whole generation of young people for whom that creates a perfect storm, which means they're going to be living with their parents forever.
Exactly. I mean, you sum it up absolutely perfectly. But equally, there are plenty of older people who are living on a state pension who don't have that savings pot. So they're not sitting comfortably. And for them, the issue of whether the pension goes up by the triple lock or not is an absolutely critical factor. So there is this issue, this tension between the generations, but you've also got other tensions between the better off pensioners who own their own home without a mortgage, who have a savings pot, who are pleased to see interest rates rising, and those who are perhaps younger on a decent salary for whom the cost of living isn't such a problem. So it's not exactly young versus old, but all of these things need to be in balance, and government policy combined with independent monetary policy need to be focused on minimizing any downturn and ensuring that, whether it's asset prices or interest rates, that these are smooth, not jumpy, and that we don't end up with unintended consequences that push us into a recession that damages jobs and the prospects for growth. And what we've not talked about is those prospects for growth. And I really genuinely think the government needs to focus on what will generate new growth in our economy. And I would point to green industries as a way of really providing levelling up, new job opportunities, new training opportunities right across the economy. So I'm really hoping that the autumn statement is going to lean into attracting business investment, foreign direct investment, getting quick decisions taken on some of the key policy areas in the green sectors that can actually generate the jobs and growth of the future.
You mentioned growth. We obviously heard a lot about growth over the summer and into the autumn from Liz Truss and Kwasi Kwarteng. Do you think that the Conservative, I know you backed Penny Mordaunt both times, so it's a slightly, you're an observer in this rather than necessarily to blame, but do you think that the Conservative Party, the Conservative Prime Minister, needs to be more upfront that these difficult decisions that we know are coming down the track, £50 billion of tax rises and spending cuts, some of that is as a direct result of what your party did?
Okay, so just to unpack that, this is a forecast. So the Office for Budget Responsibility, who is an independent purveyor of forecasts and assessor of government and monetary policy,
which your last Prime Minister and Chancellor ignored, which is partly why interest rates have gone up more dramatically, and now there's a bigger hole in the nation's finances.
Yeah. But just to be absolutely clear, those are forecasts. So a few short months ago, as has been reported, there was a forecast of 30 billion of headroom. Now there's a forecast of a 50 billion black hole. These are forecasts. They may come true, and they may be wildly out. And that depends on what levers the government pulls, the Bank of England pulls in the economy, which takes us straight back to the things that the government needs to do to promote growth. Now, absolutely, the Truss government and Kwasi as Chancellor were far too gung-ho. I mean, they made mistakes. They've both apologised. They've, I think, really both fallen on their swords over that. And that was a huge error. But the fact still remains that the OBR forecasts are forecasts that depend on what actions the government and the independent monetary policy regulators do. And that, in my opinion, does need to be measures that will promote growth and not just simply taxing and spending measures. So I'm actually a big fan of the supply side reforms, those measures that will enable businesses and investors to create more jobs, create more wealth, because it's actually by growing the size of the economy that we can actually then have a better quality of life. We will see debt to GDP falling as a percentage over time, and national debt falling as a percentage of GDP over time. All of those things are vital, and you can either do that by taxing more and spending less, or you can do it by growing the size of the economy. So I want to see the autumn statement really promoting growth in the economy, as well as getting our public finances under control.
And Andrea, I know you're straight talking politician, likes to give a straight answer to straight questions. Let me just go through some straightforward questions in terms of what you'd like to see. Should benefits rise in line with inflation?
There's some unintended consequences of doing that, which is that for many people working 16 hours and on universal credit, it actually creates some unintended cliff edges. It needs to be very carefully thought through, because so many working people are on universal credit, where their working bit will go up with average earnings or thereabouts. And if their benefits go up by inflation, then it creates a stronger incentive not to work more hours. And I do think that that's a problem. However, I also do feel that we've committed to uprating benefits in the past by inflation. And that's a very difficult decision for the government to take. I will be challenging whatever the decision is, because clearly, if you uprate benefits by inflation, you are creating disincentives to work.
It's an interesting point, that. Pensions triple lock, should that stay?
Again, that's where I'm afraid all of these things are nuanced, because triple lock, absolutely, for people who are on a fixed pension and relying on a state pension, they are not well off. Many are struggling, and particularly with food prices and energy prices where they are, even with government support, they are really, really struggling. However, as we've already discussed, there are many wealthy pensioners who own their own home, who've got private pensions, etc., who don't need that triple lock. So in my view, it may be the time now to start looking at some form of means testing. I think the government should have nothing off the table, but these things can't just be done overnight. So the government's got some very difficult decisions to take. However, again, I do think that promises have been made about the triple lock, particularly last year, where it was absolutely made clear that the triple lock would be back in place for this year. So I think this is a very difficult decision for the government.
But it's interesting, it slightly goes back to that fair, generational fairness thing we were talking about. There are some people who are, through basically not doing anything, just sitting in a house for a long time, are sitting on big assets. They've got potentially a lot of money in the bank, private pensions and so on. Somebody else is just texted in actually saying, withdraw state pension from pensioners with taxable income above £100,000 by taxing through self-assessment. Is that basically you're suggesting that the triple lock should be there, but it should be means tested?
I think that we've always gone for a universal state pension, so it would be a massive and radical change. So I do not think it's something you could just do overnight. I think it would have to be very carefully thought through and consulted on. But the person who's texted in my heart, I absolutely agree. It doesn't seem right. And in fact, I have many people talk to me about exactly that. Now, obviously, you do have the potential as a UK citizen to repay some of your taxpayer benefits should you wish to. But of course,
greater faith
not
in
many
human
people
nature.
take us up on it.
Just finally then, Andrew, you're in the running to be chair of the Treasury Select Committee. Matt Hancock was also in the running for that job. You must be the only person in Britain pleased that he's on a plane to Australia.
Well, I'm not looking forward to seing him eating witchetty grubs. But,
you're not?
Disgusting. Oh, no, I'm not. No, I'm not.
You're the only person in Britain. Everyone else can't wait.
I think there's some very good candidates for the Treasury Select Committee chair, and I'm really hoping that colleagues will be backing me whilst they watch him eating whatever kangaroo entrails they come up with.
Andrea Leadsom, really appreciate your time today. Dame Andrea Leadsom, there, former Cabinet Minister, Conservative MP, running to chair the Treasury Select Committee.